Here on an interesting Wednesday, David Gura, we had stocks in the green to start the day, but moving deeper into the red here. A lot of concerns right now about what's going on in the Middle East.
Yeah, a lot of concerns about what's going on in the Middle East. A lot of concerns sort of what the details are in the trade agreement that was reached by the U.S. and China after those 20 hours of negotiations that took place in London. We saw the handshake that the Commerce Secretary teased would happen, but now, of course, we're looking to details and sort of wondering how much more advanced the conversation is between these two nations, the two largest economies in the world.
But not only that, people have really been looking at U.S. consumer prices. We, of course, got a print today that was really showing that CPI actually didn't go as much as forecast, and that was the fourth month in a row that we were seeing that. So people are really just digesting a lot of this economic data that's really been also driving markets as well.
Right. You guys mentioned both of the big catalysts for the week. We got them, and it's kind of like, it didn't really clear up any of the uncertainty. Like, it answered some questions in the short term, but we're still dealing with the same thing. So bottom line, it's going to be hard to push the S&P 500 to break that record high. We kind of just keep bumping along, getting there, but then coming back a bit.
Because who's there to buy the dip? Like, retail was already in. Have institutional investors right size, and have the funds actually close their shorts, and have they right size as well? In which case, again, who's there to buy?
Who's there to buy? And it gets to the question you kind of posed it at the top here. So, with some of the analysts are sort of raising their estimates right now going forward. Does that sort of provide a little bit more of a catalyst for folks to come back and follow their lead, at least for right now? Still pinned in a relatively tight range, the range that we've been in now for the last couple of weeks. The Dow Jones Industrial Average, which opened higher, dipped lower, surge in the middle of the day, and then dip back into the red, is going to finish out the day on the day, down less than 1 point, 42,866 and change. The S&P down about 16 points, or 0.3%. The Nasdaq Composite losing about a 0.5 percentage point on the day, while the Russell 2000 closing down by about 8 points, or 0.4%. And one quick note here, David, Dow Transports, that was your big laggard on the day, a big downdraft of about 243 points, or 1.6%.
Yeah, I've been watching that one as well, and just looking at the S&P 500, the constituent companies in that index, 362 of them closing down today, 140 of them up, and just one of them unchanged today.
All right, let's take a look at the IMAP, which breaks down the S&P 500 into 11 sectors. And the big winner of the day is energy. 20 out of the 23 members of the S&P 500 energy index gaining on the day as oil prices surge almost 5% to above $68 a barrel. Utilities, healthcare, and industrials marginally higher at the end of trading. Your weak links here are consumer discretionary down more than 1%, and materials also off by about 1%.
Well, let me take you through some of the gainers that I was watching over the course of the day. Netflix is one of them, NFLX, of course, and Greg Peters, the co-CEO of that company, speaking at a Wall Street Journal event in London, expressing some optimism here about that company's ability to kind of weather the uncertainty that we're seeing all around the world because of trade talks. Of course, the president threatened to impose new tariffs on the filmmaking and movie-making industry as well. He's saying Netflix continues to be optimistic. It's going to make those movies overseas. It's going to stay the course, makes a lot of them in the United Kingdom where he was speaking, plans to invest more than $1 billion over the next 4 years on shows and movies that are shot in Spain, continuing its focus on games. Goldman Sachs, another one I've been watching over the course of the day. Bank of America maintaining a buy on Goldman Sachs with a price target of $700. Again, the theme here is resilience in an uncertain environment and attributing a particular promise to its asset and wealth management business. The last gainer I'm flagging here is McKesson, it raising its earnings forecast because of broad-based operational momentum. Morgan Stanley maintaining an overweight on McKesson, raising its price target from $745 to $770. Again, saying it's well-positioned to manage risks.
Can I just add a couple of honorable mentions? Oklo having a great day, their best day going back, basically since they, back to their highest levels, I should say, since they went public. And that's on the back of an announcement that they are going to be the intended awardee of a new U.S. Department of Defense contract. And also Voyager. They went public today, guys.
Really big name. I mean, we were seeing a lot of the shares surging today for a really good IPO. But let's look at some of the names that are in the red. Today, I had eyes on Lockheed Martin. This is, of course, the U.S. defense contractor. We saw shares down 4.2%. That's the biggest drop since April. And this is after Bloomberg reported that the Air Force had cut its request in half, its request to Congress for F-35 jets. Of course, this is really weighing on defense contractors, not only Lockheed, but we were seeing some of its peers down as well. But I'm also looking at Chewy. Now, we saw shares of this company falling for their worst daily performance since August 2023. That's down 11%. This is an online pet retailer. A lot of different foods that you can get there for your pets. But this is after
and
the company's...
treats too, Nora. Don't forget the treats.
Is this so? See, I don't have a pet. I'm sorry. Yeah. My pets are back in Virginia with the parents. But we did see gross margin and free cash flow falling short of expectations here. But it did reiterate its annual sales target. And lastly, another...
Are you a dog or a cat person?
I'm a little bit of both. I'm not going to lie. You know, I split the line here.
Yeah, I'm a dog person. I think Scarlett's a dog person, and you are.
Simon, welcome company.
And that was Alix Steel letting you know what side she's on.
I love it. I love it. Well, also Vera Bradley. This is a name that a lot of people know in the retail space. We're seeing shares of that company falling for their worst day since the pandemic 2020, down for double-digit losses, down 19%. The company suspended its guidance, but also announced the departure of its CEO. So that pulled guidance is really reflecting executive and board leadership changes and significant uncertainty concerning the consumer environment there.
And no surprise here, Oklo's going to offer some stock. Makes sense. Great day.
Why not?
Best since its IPO. Why not? Those bankers making some money on that. Okay, let's go to the bond market here. So buying all across the curve, less in the back end, more in the front end. The 2-year yield down by about 7 basis points below that 4% level. You wind up having that benign CPI. Stocks couldn't catch a sustained bid, but bonds could as yields moved lower. The dollar, though, couldn't either. So that was a quite interesting dynamic.
Yeah, kind of interesting, too. We should point out as well, of course, obviously the economic data that we're going to keep an eye on for the rest of the week with PPI tomorrow. And, of course, this consumer sentiment data coming out at the end of the week out of UMich. But don't forget, we get some earnings, too, out of Oracle as well. So maybe another read after the bell today here on the AI trade.
And don't forget, you also have the 30-year bond auction tomorrow as well, which is going to be a big one.
Yeah. Well, did you see the 10-year bond auction today? I was kind of interested. I mean, that did come in a little bit less than what you saw coming into that as well here. I think Oracle, guys, is now crossing the wire. Let's get right to it here. Oracle shares, at least the knee-jerk reaction. You see that right now to the upside with fourth quarter adjusted EPS at $1.70 a share. That is a beat. The street was looking for $1.64. Revenue also looks like it came in above street estimates, $15.9 billion. The street was looking for $15.6. Cloud infrastructure in the most recent period coming in just a touch light, $3 billion. The street was looking for $3.07 billion. And we should just point out margin in the most recent quarter that came in pretty much on the nose, guys, at 44%.
All right, let's also get you a read on the consumer here. We're taking a look at Oxford Industries, and I'm going to pull up the earnings right now. OXFD. The results are as follows. Actually, you know what? No. OXM. Sorry, guys. OXM Equity.
This is real time. We're good.
We're good. Okay, Oxford Industries first quarter adjusted EPS $1.82, beating the consensus estimate by 1 penny. In terms of the outlook here, second quarter net sales will be anywhere from 395 to 415 million. Analysts were looking for, on average, 411 million. And Oxford says it sees second quarter adjusted EPS of as much as $1.25, whereas analysts were looking for $2.21. I'm not sure if we're comparing like with like here, but if we are, that is a big miss on that outlook for the second quarter adjusted EPS. And you can see the stock right now down 8.5% in after hours trading. And of course, Oxford includes brands like Lilly Pulitzer and Tommy Bahama.
All right, going back to Oracle for a second, guys, because the stock is lower, but I mean, the numbers are pretty good. And the CEO is saying, Larry Ellison, that look, the 2025 was actually a very good year, but they think 2026 will be even better. Their cloud infrastructure growth rate is expected to increase from 50% for its full year 2025 to over 70% in the full year 26.
Stood out to me as well. I was just going to pile on there and say that their optimism there about the growth of cloud computing certainly coming through here in these earnings that we got this afternoon.
Definitely. I mean, we're seeing a lot of these tech names really just roaring. I mean, I think we see Oracle as we're digesting a lot of these results. Focus is really on tech here.
The focus is on tech here, and let's walk through some of the individual segments there, because that gives you, I think, why maybe a little bit more of a sense of why we're seeing them down. When we talk about that cloud services business, it was still a growth rate of about 14%, but some of the whisper numbers coming in was looking for something closer to 20%. Cloud license revenue, that was up about 9.2%. Hardware revenue, I'm not sure how much of important that is. That was up about 1%, but the services revenue was down, and that was down about 1.8%. That also came in below street estimates as well.
And there's a comment here from Stafford Cass, the CEO, saying that fiscal year 2025 was a very good year, but we believe 2026 will be even better as our revenue growth rates will be dramatically higher. Again, dramatically higher. They're looking at total cloud growth rate applications plus infrastructure increasing from 24% in fiscal year 25 to over 40% the next year.
All right, of course, we're going to have to wait for the earnings conference call to get a better read on the guidance going forward, as that, of course, is not included fully into the release. That does it for our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube. And a reminder, as always, that Bloomberg Business Week is now on Bloomberg Originals. We'll be back tomorrow at the same time and at the same place.